Welcome back to TeraBrief, where we break down global events with clarity, speed, and depth. Today's episode covers one of the biggest economic moves of the year. The U.S. Federal Reserve is preparing to cut interest rates, and this single decision could shake the global financial system, currencies, gold, stocks, Africa's economy. Everything is about to shift. Let's break it all down. The Federal Reserve, the central bank of the United States, is expected to lower interest rates. This isn't just a small adjustment. A U.S. rate cut means borrowing becomes cheaper, the economy needs stimulation, inflation might be cooling, and investors prepare for global movement. And because the U.S. dollar is the world's reserve currency, this decision doesn't stay in America. It spreads everywhere. Think of the Fed's interest rate as the master dial of the global economy. When it turns, the world's financial system adjusts with it. So what does a rate cut actually do? First, loans in the U.S. get cheaper. Businesses expand, consumers borrow more, money flows faster. Second, the U.S. dollar tends to weaken. Why? Because lower interest means U.S. assets yield less and investors search for returns elsewhere. Third, gold and commodities surge. Gold becomes attractive when interest rates drop. No interest? No problem. Gold shines during uncertainty. Fourth, stocks usually rise. Lower borrowing costs lead to higher corporate profits, which brings investor optimism. But there's a catch. If the Fed cuts because the economy is slowing too fast, markets may panic. Rate cuts are not always a sign of strength. Sometimes they are a warning. Once the U.S. rate cut happens, a global chain reaction begins. First, investors move money to emerging markets. Countries offering higher interest become more attractive, and capital flows in. Next, global borrowing becomes cheaper. Many countries borrow in U.S. dollars, so lower global interest rates reduce debt pressure. Then, imports become cheaper because many global goods, like fuel, technology, and equipment, are priced in dollars. A weaker dollar reduces import costs. Finally, commodity exporters earn more. Gold, oil, cocoa, minerals. When prices rise, exporters benefit. This is why economists say, when America sneezes, the world catches a cold. But sometimes, when America cuts rates, the world catches a break. Now let's bring it home, because this decision directly impacts Africa, and especially Ghana. If the dollar weakens, the Ghanaian cedi may stabilize. That means import costs could drop, and inflation could actually ease a bit. Ghana is one of the top gold producers, and, honestly, gold almost always rises when interest rates fall. So, more gold revenue means more foreign exchange for the country. A weaker dollar also means less strain on countries repaying dollar-denominated loans, which is a relief. Plus, higher yields and growing markets might attract global capital into Africa. But, risks remain. Commodity prices can swing, capital inflows can reverse overnight, and, of course, domestic policy still matters a lot. And let's not forget, a global slowdown could reduce export demand. So, yeah, a rate cut creates opportunity, but it's definitely not guaranteed success. Even with all the benefits, rate cuts come with hidden risks. A sharp U.S. slowdown could drag down global demand, and investors may panic if the cut seems like an emergency move. Currency volatility may return, and inflation could rise again in emerging markets. Plus, remittances from the U.S. might be worth less if the dollar weakens. The world wants growth, but honestly, it fears uncertainty. To understand how this rate cut will affect your daily life, keep your eye on a few things. The US dollar to local currency exchange rate, gold and commodity prices, government debt announcements, local inflation movements, and global financial market sentiment. These indicators will tell you whether your economy is benefiting or, bracing for impact. You've just watched a deep breakdown of the US interest rate cut and its global shockwaves, brought to you by TeraBrief. If you found this helpful, make sure to like, subscribe, and share. And join us next time as we decode the world's biggest events, one brief at a time.